Order blocks. I know you heard of them, but a lot of traders still mess up the order blocks. They don't know where to enter their trades and where to place their stop losses and how to find high probable order blocks to get the best trades. In this video right here, I'll be going over all the major order blocks and show you exactly how they work and how we can use them to catch the best trades. So make sure you stay tuned to this video and take note. If you have been having problems with the order blocks, this video right here will clear all of your problems. So without further ado, let's get straight into this video. I'm gonna go over the win rate blueprint, right? This is gonna be the title for the video, the win rate blueprint, how to trade order blocks without getting sniped, right? Most traders don't have a bad strategy, right? I keep stating this. They just don't lack true confluence and they don't know where to place their trades without getting caught in the liquidity traps, right? I speak on the inducements and just different type of liquidity a lot. Once you fully understand the order blocks and liquidity and how we can use order blocks, fair value gaps, and liquidity, you can see exactly how we catch the best trades and get the best entry. Let's go for step one. We have to follow the 3 non-negotiable order block rules. The number one rule is that a break of structure must originate from the order block. That order block, right, whether it may be a breaker, a mitigation, a bearish engulfing, or just a rejection block, it has to give us a break of structure of a prior swing high or a prior swing low, depending on the trend. The second thing is the order block must not be mitigated, right? It has to be unmitigated. Mitigated means that price hasn't used it yet, right? Let me go to this right here. As you can see, this order block is a clear order block. Once price goes into this bearish engulfing order block and tap into it, this is called a mitigated order block. For this order block to be validated, for me to use it, it had to be unmitigated. No prior wicks or zones had to be tapped into it. And then the final rule, the third rule, is that it must be formed during high volume impulse. If even one of these is missing, I skip it, no emotion, I just collect the data and I move on, right? These are the strict rules of order blocks. If an order block doesn't do one of these things, I just simply do not take the trade. An order block is only formed when there's high volatility news. That's why we trade the New York session in the London session, where we have high volatile movements. The Asia session is mostly a consolidation range type of session, right? But during the London and the New York session, that's when we can find the high probable order blocks. Before we continue in this video, if you are a person that want to trade live with me and my brother 𝗁𝗀𝘀 trades every single morning, make sure you click the first link in the description and join us every single morning at 9 a.m. EST for the New York session and trade live with us. Now let's get into step 2. We have to scan for nearby liquidity. We avoid order blocks stacked near obvious support and resistance zones. A clear order block, right? I learned this from my mentors. He said a clear order block is a sign of liquidity. Whenever price just give you a clear order block, like say this was just a bearish engulfing order block right here, but there was no liquidity near this point of order block, right? There was nothing here, right? This was just a clear order block. I would not take this trade right here because this order block, price may just run through it to then reverse. So this order block becomes our liquidity point, right? So I never use a order block without any points of liquidity near it. Second, if price reacts to the order blocks, then dumps through it, you just got liquidity sniped, right? Just like I stated, if price literally runs through the order block, right, and then falls lower, you were liquidity, right? You are liquidity because price used that order block as liquidity to fill in another zone to then push down lower. That happens a lot. That's called a fake out. We always watch for clean double bottoms or double tops near our order block zones. If liquidity is right under your order block, we wait for it to get swept first. That's why I state we always look for the order blocks that have a liquidity point near it. So when price runs through that liquidity, then tap inside of our order block, that's when we look for this drop lower. But if we don't have no liquidity near our order block, this right here becomes invalid. And better yet, we enter after the liquidity sweep on the lower top frame entry or a refined order block. I'm gonna go over all these types of order blocks. I'm just gonna go over these steps right here. For step 3 is that we look for a equal high or equal lows near the order block. These acts as liquidity magnets. Smart money will sweep the liquidity before the move and your order block becomes a premium entry. That's why I said we always look for those zones that have liquidity near them, right? If we have liquidity near it, that's a great zone. Or, right, we also have a return to order block type of pattern. This is the pattern right here, where price sweeps a prior high and then give us a break to then come back and use that order block to push down lower. But still, price still swept this old high. So this makes for our liquidity sweep, and this is our breaker structure. So this right here is our entry to then push down lower. So we always, even if we don't see it, right, we always use a liquidity sweep, or we may see a failure swing. I'm gonna go over these type of models also. In the first step 4, we confirm price is drawn to an imbalance. Price wants to fill inefficiencies. If we have an imbalance that sits between current price and your order block, expect a reaction, then tap inside of your order block. This is where many get tricked, right? Imbalances fake reactions only to head to the real order block. First, we have our bearish engulfing order block, and this is our bullish engulfing order block. The bearish engulfing order block is where we have a bullish candlestick that has been engulfed by a bearish candle, right? This is supposed to be bearish engulfing order block, my bad, right? Price will then come back and use that bearish engulfing order block to then extend lower. So this right here is an example for a bullish engulfing order block, right? Where we have a bearish candle that's engulfed by a bullish candlestick. We see price pull back and use the 50% of that order block to then extend higher to clear buy side liquidity. These two order blocks are by far like the most powerful type of order blocks. These are the most common in like the bearish engulfing order block. Like if you have liquidity in a bearish engulfing order block, like highly likely 80% of the time, like this right here, like is crazy massive, right? It's extremely powerful. But these two right here are the most common in classic order blocks. Next, we have our rejection order blocks. The rejection order blocks are mostly reversal type of zones, right? These are like higher time frame zones, right? We mostly see them on the hourly, the 30 minutes, or the 15 minutes, where price will leave a strong wick. That strong wick will push up higher to break a prior lower time frame high. Then price will go lower to mitigate a zone in top of this wick right here. This strong wick on the lower time frame is more lower time frame candlestick, but on the higher time frame is a strong wick. That's why we label it a rejection order block. So we either use the 25%, the 50%, or the 75%. And our stop loss goes at the lows of this rejection block, and we're targeting for prior highs. It's the same exact thing for the bearish movement, right? A bullish candle that is engulfed by a bearish candlestick leaves this strong wick. Price usually use the 25% or the 50% or the 75% to then reverse lower, right? This is our reversal type of patterns, right? Our rejection order block. Next, we have the breaker order block. This is by far my favorite type of order block. Like I love the breaker block because it's so powerful, right? First, price has to clear a prior high, give you a firm liquidity sweep on the higher time frames, either the 15 or the 30 minutes time frames, right? I look for this liquidity sweep to happen. Then for price to push down lower to give me a market structure shift of the low that did that liquidity sweep. This right here was supposed to be a bullish engulfing order block, supposed to hold to push price go higher. But once price breaks through this right here, this becomes a resistance point right here. So on the pullback, what do we see? We see price pull back and use the open of this bearish candle to then extend lower to clear the low down here. So this is our breaker order block in a bearish movement. And it's the same exact thing for a bullish movement also, right? It's just gonna be reverse. Price will pull back, use that breaker, your entry right here, and your stop loss right at the candlestick highs. And you're gonna target these old lows down. But this is our next order block, the breaker order block. This is by far one of the most powerful types of order block. Now we have the mitigation block. This is the brother to the breaker block. The only difference between the mitigation and the breaker is that we have a failure swing instead of a liquidity sweep. For the mitigation block, price won't push down lower to sweep the low. It's gonna respect that low and then give us a internal range breaker structure. The high that got broken becomes a mitigation block. You want to use the open to take your trade and your low for your stop loss, and you're targeting prior highs, right? Price pull back, mitigate this mitigation block to then extend higher to clear this high right here. But these order blocks are the most powerful order blocks. I use these every single week, and you just learned them and you just mastered them, right? Now let's go on the charts and see exactly how we can apply these order blocks to take beautiful trades. We're on our charts. If you've been watching the previous videos, you know this is a market maker sell model. This is right here. I've already labeled a lot of the order blocks, but I'm gonna walk you through them and how I would use it, right, to just see how to form a setup or just like a trade. For our order blocks to work, it has to have confluences. If we don't have confluences, it's the confluences that give us confidence to know that a order block may work. So let's go over some of these order blocks. First, we have this breaker order block right here. Like I stated, the breaker order block usually doesn't have a liquidity near it. It's usually like a we label it as a RTO, right? A return to order block. We see price clears these relative equal highs to then push down lower and give us this breaker structure. Like I stated, the last bearish candlestick before price extend higher to give us this liquidity sweep. This is our breaker order block. But the thing that makes this powerful is that it's aligned with this fair value gap. A breaker in a fair value gap, we label this as a unicorn model. This right here could have been a trade, right? This could have been a trade in itself. Like I stated right here, in your targeting prior lows. Perfect. This is what we call a RTO type of setup. So this is a trade in itself. I'm gonna leave this here. But right in this new dealing range, price came from this high marked in red to this old low down here. So everything inside of this range right here is entering range liquidity. So this breaker order block, this RTO entry, is just building inducement for this bearish engulfing order block. For any order block to work, we have to have liquidity near it. So for this breaker to work, price had to clear this relative equal highs to then give us this breaker structure. And for this bearish engulfing order block to work, price had to pull back, right, and give us this trade to then extend lower. Now this prior high right here, if any trader didn't take their profits, right, the greedy traders, money's still up here, inducing this bearish engulfing order block. So how do we take a trade from this bearish engulfing order block? It's two type of ways, right? If you're like a risky trader, you could just place your trade right at the open, like a swing type of trader, I say. Place your trade right at the open and your stop loss right at the high, and you're targeting a prior liquidity pool. Me personally, I look for fair value gaps, unmitigated fair value gaps that hasn't been tapped into. This one or this liquidity void down here, but this unmitigated one would be my first type of entry. So when price pulls back and clears this inducement high right here and tap inside of my bearish engulfing order block, I'm just sitting and letting it play out. That's if I'm a type of like swing trader or just a type of trader that's just like a set it and forget it type of trader, right? I'm just gonna let price play inside of the zone to then extend lower to tap inside of my entry. So this could be a type of trade right here, right? For a type of swing trader, how to use this order block. Or if we want a better entry, like I stated, the 50% of these order blocks are extremely powerful. Let me grab this right here. We see price pull higher and give us this high. The 50% of these order blocks, especially the bearish engulfing order blocks, this is where the volume, right? The volume where a lot of the orders are hiding at, right in that 50%. The 50% could be your next entry also. If you don't want to take the open, right? You don't want to like, you want more of a precise entry. The 50% is perfect also. And where are we targeting? This prior low. Perfectly. So this could be another type of entry right here, but you're using the 50% of this bearish engulfing order block. Me personally, the entry that I love the most and that I would recommend for a lot of beginners, right, is the confirmation entry. All these entries are valid, right? There's even buy entries here. There's even buy entries down here where price breaks through a high and pulls back and use that to then extend higher. There's even buy entries, but the most and safest entry is the confirmation entry. It's when price uses a higher time frame zone to then give us lower time frame movement. Then inside of this higher time frame zone, we find a entry that leads to the lower. This type of entry right here, this type of setup provides the most confident in the best risk to reward, because you know exactly price already gave us that risk entry and it confirmed it. So all we're looking for is just a pullback for a final distribution move. This right here is my favorite entry. It's called the confirmation entry, right? So basically inside of a higher time frame zone, I want to see price give me a liquidity sweep first. to then extend lower and gave me a market structure shift, right? Now, this whole move right here is a lower time frame market maker sell model. We see price leave this fair value gap right here near this bearish engulfing order block. These zones right here, right, the fair value gap is like a magnet. It will always fill before it extends lower. Either the 50% will get filled before lower, or price will fill it in completely and use a zone above it to then push down lower. But this right here makes this bearish engulfing order block more powerful because it gave us a liquidity sweep inside of this zone, and we got a market structure shift and a fair value gap. You see how much confluences that we have for just one order block. That's why this makes this so powerful. So our entry goes right here in our stop loss, right at this order block wick, or you can place it at this old wick too, right? And where am I targeting? This fair value gap open right here. This right here is the best trade because it's the most confirmed trade. We use previous zones, previous types of order blocks, right, to validate this trade right here. This whole setup came from this leg, from this high to this low down here. So when price pulled back, this breakers trade right here, this already happened. So we already missed this. This bearish engulfing order block, you don't know if this is gonna hold. Price may just rally higher, boom, purge through it. So you lack confidence for this trade right here. But once price give us a liquidity sweep and a market structure shift inside of this zone, this right here becomes our confirmation trade right here. This bearish engulfing order block. This right here is the best in beautiful setup, right? So all I want to see prices do is pull back, use this right here as my entry to then push down lower to fill in these lows down here. Boom. Price even mitigate the 50% of the fair value gap to drop lower, but it wasn't done, right? It went higher, mitigated the open of the order block, but it wanted more, right? Then price went again and tapped into it. That's why we give ourselves room inside of these trades, just in case price is playing around like we see here, to then quickly violate lower. An important thing I want to leave you guys with, right? And super important thing, even if you miss this confirmation entry right here, there's what we call a super confirmation entry, right? It's where price, after every break of structure, as you can see here, this is the super confirmation entry. On the pullback, the order block, just like I stated, that did the break of structure, make sure you go back on the lesson, right? Make sure you go back on the lesson and take notes on that also. The order block that gave us the break of structure, this right here becomes our super confirmation entry. So if we miss that entry, the confirmation, this right here is our super confirmation entry. We could use the order block open, just like I stated right here, in our stop loss at the prior candlestick wick, and I'm targeting the same zones. Look at this right here. Pull back, tapped into it, just like that, man, perfectly. This right here is how we use the order blocks to catch the best entries, to just get the best trades. It's a lot of order blocks, but once you understand how to use the order blocks in the proper ways to use them, man, like, you're gonna get the best trades. I've created videos on all these order blocks. I got videos on the rejection, the breaker, the mitigation, and just all the order blocks. So make sure you go through my channel and just watch every single one of those videos, and watch this video again so you can get the full understanding of the order blocks. Well, this is it. I hope you got a lot of value out of this video. If you want the full PDF of this exact video, click the first link in the description and join the Spark Trading community, where you have access to a full library and a full trading course of me and my brother Arkham Trades, of all our PDFs and our free trading course where we go over this complete concept. Make sure you like, subscribe, and comment down below any video suggestion or what do you think of this video right here. I love all of the feedback. But this is it. Spektrades out.